And there was the rest of the expenses during the month. The different segments that you do. Anytime you need to rent something, buy something, move something, transport something, flights you're booking for people, the team that you have, the payroll. It's a business, bro, so there's gonna be a lot of expenses, and it tallied up to 350,000, man. It's a lot, bro.
Was any of that a write-off?
All of it is write-off. Every business expense is write-off.
Alright, so I'm gonna stop right there because there's a lot to unpack. Tylo has a very good question, right? Is all of this a write-off? If Tylo asked this question to someone other than agent, like say someone isn't a creator and Tylo asked him that question, assuming all things constant, assuming he spent on that equipment, he spent on that venue rental, the answer might be no. But because agent earns his income the way that he does, the answer is yes. Let me tell you why this is the case for agent. Agent is a content creator and earns his income by streaming. The video, the marathon of him losing weight is an income producing piece of material. This means that everything incurred to make that video happen is a legitimate business expense. And this is factuated, this is solidified because he doesn't co-mingle expenses, right? Like he is computing all of the expenses that he's like, okay, this was for the business in a sense as this was for the marathon. And he's not including anything personal like, you know, going to Nobu on a date or something else like taking his mom out to eat or buying his mom a car. Like that's not gonna show up in these expenses. He's not trying to cheat the system, but he's trying to maximize and optimize his tax position by capturing all of these business expenses, right? We're talking about the venue rental, the gym equipment for the marathon, the payroll, the staff that he needs to have. These are legitimate business expenses because of how agent earns his income. In the case of an audit, when it comes to the burden of proof, it is on the creator and their accountant to do so. They have analytics to tie all of these expenses back to the income that they've earned. Twitch makes it easy as well. YouTube makes it easy as well. We can see all of our analytics and trends based on videos and see, he just showed it to them, I believe, like in terms of estimated revenue from clips. You're able to tie that revenue to certain expenses if proof is needed, right? So to answer Tylo's question, it's a legitimate question. You're always asking yourself, are these all legitimate write-offs? Not for everybody. Not for everybody. Like if you run an agriculture or construction business, good luck trying to write off a venue rental for a weight loss marathon. Imagine you're doing your own weight loss journey and you try to write this off and you run a construction business. The IRS will laugh in your face. The CRA will laugh in your face.